we're good, and if you want to do a quick sound check.
Testing, testing.
Can we get a thumbs up if you can hear us and see us, please? Great.
All right. Okay, let's begin. Good afternoon, everybody. My name is Scott Johnson. I'm the President and CEO of Community First Credit Union, and we'd like to welcome our members to the 63rd annual meeting of the membership. Due to ongoing concerns with the coronavirus pandemic, we will be conducting this year's meeting virtually. And due to the virtual nature of this year's meeting, we will not be taking any questions from the floor. We sincerely hope that this is the last virtual meeting that we'll have, and we'll be able to get back to an in-person meeting for 2023. So at this time, I'd like to welcome Carolyn Welsh, our board chair, to call the meeting to order.
Thank you, Scott. Will the 63rd annual meeting of the membership please come to order? Mr. Secretary, please confirm we have a quorum of at least 14 members and proceed with the approval of the minutes from last year's annual meeting.
Thank you, Madam Chair. In accordance with the bylaws of Community First Credit Union, a quorum is present for the 63rd annual meeting of the membership. The minutes of last year's meeting were provided electronically to the membership prior to this meeting. Are there any proposed corrections to the minutes as presented?
We will unmute.
Yeah.
Hearing none.
Hearing none?
As there, we will unmute, yeah, okay. Hearing no proposed corrections, the minutes are approved as previously provided. Thank you, Madam Chair.
Thank you, Mr. Secretary. After a few 2021 and saying a few words about what our members have to look forward to in 2022. So due to the continued demands of the COVID pandemic, 2021 required your credit union to constantly pivot to unprecedented challenges. At times, it was a struggle to keep our branches and the call center open due to staffing shortages. However, our employees always found a way to weather the storm and produced record financial results for Community First in the process. Community First ended the year with $761 million in assets, which places your credit union in the top 10% of all credit unions in the nation by asset size. Your credit union remains fiscally sound, strong, and well capitalized heading into 2022. I'd like to thank all of the employees of the credit union and the volunteers from our board of directors and supervisory committee for their contributions and commitment in 2021. At this time, I'd like to turn it over to our President and CEO, Scott Johnson, for his comments regarding 2021 and a look forward to 2022. Scott?
Thank you, Madam Chair. 2021, simultaneously the best of times and the worst of times for Community First. It was the best of times for us economically. We had record earnings of almost $7.5 million. It was also the worst of times due to the unrelenting roller coaster ride that was the COVID pandemic for the balance of 2021. And with that backdrop, I would like to take a moment and thank our employees for their resiliency and their tremendous dedication in 2021. I'd also like to thank our board and supervisory committee volunteers for their service and support in serving our membership. As we look back on the last year, I would like to take a moment and spotlight a few noteworthy accomplishments for your credit union. We can go to the next slide. There we go. One of the things that we're very proud about at Community First is that we believe we pay consistently higher dividend rates on our share deposit products relative to the competition in our markets. And at a time when inflation was at its highest rate on an annualized basis in more than 40 years, Community First paid more on your member deposits, making your dollars go further in a very difficult year with rising prices. We're also very proud about our loan rates, and that contributed to outstanding growth in our loan portfolio for 2021 and a record in funded loans. Our loan to deposit ratio ended the year at 83.3%. And we did that in spite of another year of historically rising deposits relative to what we've seen in our industry, looking back maybe 30, 40 years. And I'm very proud of that fact because as deposits come in, your credit union continued to turn those deposits around and lend to our members and help them reach their financial goals. On the information technology front, we made a very large investment in IT infrastructure to strengthen the resiliency and performance of our core systems, including our online banking environment. We also improved our disaster recovery capabilities by migrating critical production environments to a new co-location facility with greater redundancy and recovery capabilities. I'm also proud to announce that we had the first digital virtual assistant in the entire United States to serve our Spanish-speaking members, and that was Spanish-speaking Maggie. We're very, very proud about that. Also, at a time when the rest of the industry was struggling with staffing just to do basic things like answer the phone, we answered over 115,000 phone calls from our members. We kept our wait times under 2 minutes, and we achieved an abandonment rate of less than 3.3% at a time when many other financial institutions were simply struggling to answer the phone. We invested in new instant issue card machines in our branches, making it easier than ever before to get a debit card in the branch. We invested in a new company intranet to improve communications and efficiencies between our team members working in different geographical locations. We also rolled out a new work from home program to improve retention and scheduling flexibility for our employees. And one thing I am very proud about, especially in lieu of rising inflation last year and just the compression, if you will, on price, or the expansion of wages, if you will, is that we increased our premium contributions for covered dependents on our healthcare costs by 34% to put more take-home pay into our team members' pockets and to improve our retention. And in 2021, Community First was voted one of the best places to work by the North Bay Business Journal. And then one last thing I want to share with you from 2021. Our employees invested over 2,300 hours volunteering in the communities we serve, and we also donated approximately $140,000 to various causes to benefit the communities that we serve. Some notable highlights include $10,000 for the Girl Effect to support 4 college-bound seniors, $7,500 for the Winter Clothes Drive, and approximately $25,000 for the Redwood Empire Food Bank. So it was a great year. We thank you all. We thank our team members. We thank our Board and Supervisory Committee volunteers. And now I'd like to take a moment and just take a look forward at some of the key initiatives and highlights that we have planned for 2022. So 2022 is shaping up to be an interesting year for a number of reasons. We've got the backdrop of rising inflation, which continues to make our dollars and our hard-earned wages go a little bit less. We've got the war going on in Eastern Europe. We've got extended supply chain challenges. We've got continued labor shortages, rising mortgage rates, and a Federal Reserve that's very, very hawkish with respect to monetary policy. So it's shaping up to be a challenging year for 2022. But I'd like to ensure that you have our commitment that our credit union, your credit union, will continue to meet those challenges head on. So with that backdrop in mind, let me talk about some of the things that we have planned for 2022. We have completely reimagined our unsecured lending products to complement our already strong auto and real estate products. Our unsecured products were re-engineered to deepen our relationships with you, our members, and to provide them with greater access to credit so that they can be more successful in reaching their financial goals moving forward. We're very, very excited about that. That actually launched on April 1st. The preliminary results are very, very encouraging and exciting, and I can't wait to see how that continues to unfold for the balance of this year. We've also forged new fintech partnerships to make it easier for members to refinance more expensive loans with other members and save them money on their monthly payments. That capability will be launched very shortly, and I'm very excited about the prospect of helping our members save money on their monthly payments, especially at a time when rising inflation continues to pinch the purchasing power of our hard-earned wages. We will be launching a new 97% LTV mortgage product with very low PMI rates to make the dream of owning a home more achievable for our members who qualify but lack the funds necessary for a conventional down payment. We're also launching a new technology platform that will allow new members to conveniently open a membership with Community First electronically, either through a phone or a website. This not only allows more new members to experience the benefits of membership, but this investment will also allow our existing members more convenient and faster digital access to open additional products with the credit union. This technology will also benefit our prospective members who prefer to visit a branch. It will eliminate paper-based forms, and it will reduce the time to open a new membership to about 5 to 10 minutes. We'll be relaunching our website by the end of this year to make it easier, more aesthetically pleasing, and more intuitive to find the information that you're looking for. We want your digital interactions with us to be intuitive, easy, and efficient. We're also going to be selecting a new online banking platform for implementation in 2023. We're very, very committed to making sure that we give our members the enhanced digital banking features and conveniences that you deserve, regardless of your device preferences. We're going to continue to expand our cannabis banking services to legitimate cultivators and retail dispensaries in the communities we serve. These legitimate and legal businesses remain in desperate need of banking services, which also makes our communities more safe. And then finally, we're also going to be exploring new auto leasing relationships to offer additional financing options to our members and build on the already strong auto lending reputation that we've established in our markets. So in closing, I'd like to thank you all for your continued membership at Community First. We know that you have a plethora of choices when it comes to your banking options. The management team at Community First remains committed in 2022 and beyond to paying outstanding dividend rates, consistently offering competitive lending products, and looking forward to partnering with you to help you achieve your financial goals. We also want your member experience in all of our physical and digital channels to be the best that it can possibly be. So I thank you once again for your membership with Community First, and we wish you all a healthy and happy balance to the year. And with that, I'm going to turn it back to you, Madam Chair.
Thank you, Scott. Mr. Vanden Heuvel will now present the report of the treasurer on behalf of Robert Scott, who cannot be with us today.
Thank you, Madam Chair. As she previously mentioned, for the year ending 2021, the credit union had total assets of $761 million, which represented a 17% increase over the year ending 2020. Asset growth was driven by very strong share deposit growth, which finished 2021 at $687 million and represented an increase of 17.8% from 2020. Core shares and share drafts and money market shares all experienced double-digit gains in 2021. Money market shares experienced outstanding growth of almost 43%, in part due to the outstanding market dividend rates the credit union paid to its owners. The credit union also experienced exceptional growth in 2021. Loan growth, Total loans increased by $89 million and ended 2021 at $572 million, which represents an 18.4% increase for the year. Growth in the loan portfolio was led by new and used auto loans and real estate loans, which grew by 13.8% and 34.2% respectively. Historically, low mortgage rates resulting in a boom of refinancing applications combined with high competitive new and used auto rates in our markets were major contributing factors to the gain in the lending portfolio for 2021. Credit unions' allowance for loan loss reserve decreased by $608,000 to $3.2 million at the end of 2021. Included in the allowance for loan loss was a 12-point qualitative and environmental component for the potential future loan losses related to the COVID pandemic. Both delinquencies and charge-offs experienced materially better results than forecasted for 2021, which favorably impacted the allowance for loan loss reserves. Rising market values for used car prices had a favorable impact on auto recoveries and next charge-offs. It was a record year for earnings in 2021, with net income finishing the year at $7.49 million. Lower than expected provisions for loan loss expenses to fund the allowance for loan loss provided a major tailwind to earnings. The credit union's capital and net worth ratios finished the year at 9.06% and 8.29% respectively. Credit unions with a net worth ratio of greater than 7% are considered well capitalized by the National Credit Union Administration. Your credit union remains strong and well capitalized for the future. In closing, we know that our members have a choice when choosing financial partners. You can continue to count on the credit union to offer you the products and services to help you reach your financial goals. Thank you for your member and support in choosing Community First Credit Union.
Thank you, Mr. Van den Heuvel. At this time, I would like to welcome Monica Besanson, CFCU's Chief Lending Officer, to give the report of the credit manager. Oh, hang on, Monica, you're
muted. We got to unmute you. Just one moment.
made her
I've
microphone.
unmuted her.
Oh, are you muted, Monica?
Remove
No?
moderate
Okay.
mute.
Technology.
Okay.
She's still showing muted.
Yeah.
All right, I threw it wide open. You should be good now, Monica. Sorry about that.
No problem. Thank you, Madam Chair.
Sure.
2021 was a record year for loan origination volume. The credit union originated or helped to facilitate origination for over $356 million in loans for our members. While funding rates were generally lower than 2020 due to the historic low rate environment, net interest income spreads were down only 21 basis points in comparison to 2020 and significantly higher at 3.33% compared to national averages of similarly sized credit unions. Auto lending channels witnessed record funding levels with $29.9 million in direct and $175.4 million in indirect loans to our members, which represented an increase of 22.4% and 29.6% respectively in comparison to 2020 origination volume. Origination of first trust deeds was also strong at $108 million, and our real estate team proudly put 164 members into new homes. Unsecured consumer lending continued to lag and will be a major point of emphasis in 2022 to deepen our lending relationships with our members. Reportable delinquencies were considerably better than forecast for 2021. Continued government stimulus programs combined with reduced levels of consumer spending due to a number of macroeconomic factors all contributed to greater savings for our members, which reflected in our delinquency ratios in 2021. Quite simply, greater liquidity for our members resulted in fewer delinquencies. Resulted in fewer delinquencies on their loans. Continued COVID-related support for loan deferral and forbearance requests also helped contribute to the decline in reportable delinquencies. The credit union's reportable delinquencies as a percentage of total assets finished the year at 0.52, which represented a 0.32 decrease compared to the same time period in 2020. Net charge-offs also performed substantially better than planned and had a favorable impact on earnings in 2021. Net charge-offs for real estate loans in 2021 were zero. Finally, net charge-offs were also aided by higher than historically realized recovery percentages for repossessed autos. I'd like to thank our members for placing their trust in Community First in 2021 and encourage them to think of us first whenever you have a lending need in the future. Thank you. Back to you, Madam Chair.
And Dave's cheering. At this time, I'd like to welcome John Curry, Supervisory Committee Chair, to give the report of the Supervisory Committee.
Chair, the Supervisory Committee of Community First Credit Union works in conjunction with the Board of Directors to monitor and review the credit union's accounting procedures and practices. The Supervisory Committee endeavors to ensure that all fiscal operations are performed accurately and in compliance with the applicable regulations and generally accepted accounting principles, GAAP. To assist the Supervisory Committee in monitoring the credit union's fiscal activities, we've retained the services of an independent public accounting firm to perform an audit of the financial statements and records of Community First Credit Union as of December 31st, 2021. Turner, Warren, Wang, and Conrad AC perform the annual financial statement audit. It is the Supervisory Committee's opinion that the financial statements for a Community First Credit Union as of December 31st, 2021 provide a fair and accurate representation of the fiscal condition of the credit union. We would like to extend our gratitude to the volunteers and staff for their ongoing commitment to improving the internal controls environment. We are also pleased to report that the Community First Credit Union is fiscally strong and well-positioned to continue to serve its members. On behalf of the entire Supervisory Committee, it has been our pleasure to serve the membership in 2021.
Thank you, Mr. Curry. At this time, I would like to welcome Arlene Colombini, who is representing the nominating committee of the Board of Directors. Mrs. Colombini will be reviewing the nominations for the Board and Supervisory Committee positions that are up for election. Arlene, you're muted. Does she know she's muted? Can you unmute Arlene?
I
There you
just
go.
did. Okay.
All right.
Here we go.
Thank you, Madam Chair. On behalf of the nominating committee of the Board of Directors, the candidates for each open board and supervisory committee position were provided electronically to the membership prior to this meeting. A brief personal bio for each candidate was also provided. Each candidate is up for election for a 3-year term. The nominating committee fully complied with the notice provisions of Section 2 in the credit union's bylaws. In accordance with paragraph D, Section 2 of the bylaws, as there were no more nominations than the number of vacant positions for the Board of Directors or Supervisory Committee, the board confirms that those who were nominated and qualified are declared duly elected.
Great. Thank you, Mrs. Colombini. We will now move to the final item on today's agenda. And there being no new business to conduct, that concludes the 63rd annual meeting of the membership. I'd like to thank you all for your participation today. I'd also like to thank you for your continued membership and support in the future. Today's meeting is officially adjourned. Thank you. Bye.
Thank you.